In July, a fifth African country returned to the Eurobond market for the first time in 2 years. Cameroon followed Côte d'Ivoire, Benin, Kenya, and Senegal, which have raised a combined $6.2 billion in new bonds. Cameroon issued $550 million in international bonds at a record costly yield of 10.75%. Cameroon is looking to meet a fundraising target of $1 billion, including domestic bonds, to raise expenditure ahead of the 2025 presidential election. The sovereign has been running budget deficits for over 12 years. The record high yield on the latest Eurobond, which was raised through a private placement, suggests the Cameroonian government needs the funds more desperately than suggested by the country's presidency. The African Development Bank estimates that Africa's total external debt, which stood at $1.12 trillion in 2022, had risen to $1,152 billion by end 2023. The uncertain outcome of the US presidential election will probably halt Africa's issuance of international bonds. Few African sovereigns are expected to tap into the bonds market in coming months as the US political drama plays out. Meanwhile, many African countries are facing a backlash over the unaffordable cost of living and fiscal consolidation efforts, which may put an end to the debt binge. In June, Kenya's government tried to raise taxes for the second time in a year and cut spending on subsidies to meet IMF conditions following a refinancing of a $2 billion Eurobond that matured that month. While Kenya avoided a default on the bond, the country's political scene has since exploded. What started out as peaceful Gen Z demonstrations are now turning into violent riots and acts of sabotage. Persistently high food price inflation in large economies such as Ghana, Angola, Egypt, and Ethiopia, as well as smaller countries like Malawi, Burundi, and Zimbabwe, will increasingly drive protests. If Eurobonds are expected to hit pause for the remainder of this year, African local currency debt has also taken a knock amid pressures from higher for longer US interest rates and geopolitical risks. For most African sovereigns, bond financing options are becoming scarcer, while maturities will mount again from 2025. Many treasuries are building up reserves of gold to mitigate external shocks to their economies and reduce dependency on the US dollar. Despite the rush to Eurobonds by some sovereigns in the first half of 2024, Africa's debt crisis is nowhere near resolved.